Hello, this is Alex Kazmark for SpotEuro, and this is your free daily video for Wednesday, March 31st, 2010. A quick reminder before I begin, the purpose of this free daily analysis video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is conduct technical and fundamental analysis, point out levels of support and resistance for the next 12 to 24 hours, and talk about potential trade setups that we may be using during our live trading sessions. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. As trading conditions are constantly changing, please make sure to watch tomorrow's video to stay updated. Well, a bit of consolidation across the board yesterday as markets are gearing up for economic data releases this week, specifically this Friday's non-farm payrolls release. The commodity currencies, specifically the Aussie, have done extremely well, and the Aussie is now testing the upper limits at 92 cents. With retail sales coming out within just 1 hour, we'll be looking for either a continuation higher above 92 or a failure and a move lower behind worse than expected numbers. We should continue to see extreme volatility and are focused on the longer term picture rather than the short term. And it's becoming very dangerous over the last couple of days, and we are opting out of using stops that are further away than what we would like to see. Hence the lack of the frequency of trades and the lack of direction. Currently looking at the euro dollar on the daily, trading at 134.25. Once again, the euro is the only one that's really losing ground to the dollar, and this isn't really because of dollar strength, it's mostly because of euro weakness. And it's becoming dangerous at this point to trade the euro either to the downside or to the upside, as any news out of the EU concerning Greece moves the market easily by 100 pips. At this point, we're going to stay away from the euro dollar. We're going to concentrate on some of the other pairs. But in the long picture, we're still seeing the dollar rally against the euro, and we are forecasting the market to break below the 132 level and to at least hit the 125 level before the end of the year. As we can see here, there's a Fibonacci retracement from this leg down. Market's bounced off the 50% retracement level almost perfectly and is now continuing its move lower. So as of now, we're forecasting the market to continue heading in favor of the dollar against the euro. Looking at the pound dollar, we see a little bit of a different picture. We're wondering whether or not the pound has put in a bottom at 148. We saw that twice now. And the second time we're seeing quite a nice rally back into the 149.50, 152 range, currently trading above this upward sloping trend line. We are focused on the market continuing heading higher up to 152, possibly topping out there, before setting a further downward sloping trend line and a continuation lower, and then we're going to be focused on a break of the 148 level. Also, if we take a look at the Fibonacci retracement, we can see that we're just at the 50% level. This could be a nice level of resistance, so we're also looking for short opportunities here. But again, the 148 level is intriguing, as it could be a potential bottom here. If we take a look at the weekly chart, the 148 level could provide a nice level of support, as it did provide a nice level of resistance before the breakout higher. Also, something that we could take a look at. I haven't had a chance to look at this on a weekly graph, but the 61.8% retracement level is literally at 148.80, which is just above the 148 level. And on the weekly chart, we haven't been able to close above that 61.8% retracement level. Once again, let me show you that retracement that we're following. It's from the move up that we saw the bounce off of 134.70. A move higher, market retraced 38.2%, continued higher, and has continued retracing down, currently at 61.8. So it's possible that that 148 level could be legit as a longer term bottom. So again, we're not seeing a lot of consistency throughout the market with what the dollar is doing. So we should be focusing more on each individual currency rather than solely the dollar. Looking at the dollar Swissy, it's trading at 106.50, and once again, we are stuck between 107 and 106. Yesterday, we covered this retracement higher on the leg up. Market retraced off the 61.8% level and is now retracing from this leg down to the 61.8%. So we're looking for the market to stick in between this level, and we're looking for a breakout either higher or below this level. Looking at the dollar yen, very interesting as we don't have much resistance above the 93.60 level. Next resistance is going to be around 96 and change. So we're wondering how much higher this can go. We'd like to see a retracement back down into this channel to about 91.80 before the market continues slowly grinding out higher highs. As of now, we still think the dollar is going to lose ground against the yen and possibly head back down to the 87 figure. How it's going to work that out, we're not quite sure. So we're going to be doing this on a daily basis. We're currently looking for a break of 103. A break of 93, and then we're looking for a rally up to 93.60 before further stalling. Looking at the Canadian dollar trading at 101.80, market remains below this trend line. That was a nice level of support here. We're now looking for the market to continue heading lower against the dollar. We're not seeing a lot of consistency here between the majors. However, the commodity pairs have been doing really well, and we do predict the Canadian dollar to continue outpacing the dollar, heading down to parity. New Zealand dollar's been the weaker of the commodity currencies, currently trading at 71. Not quite sure what to make of this just yet, so we're being very patient, possibly setting up a wedge here before breaking out higher. However, we do have a longer-term wedge setting up here as well. But more importantly, we would like to see a break of 70 cents, and we're looking for a short trade there. Finally, the Aussie dollar. Again, very important that we stay below this downward sloping trend line. A break above that is going to confuse the market, and it should continue rallying. The problem with that is then it's going to need to break the 92.50 area, breaking the last pivot high, aiming towards 93.20, followed by 94. If it breaks all these three critical levels of resistance, we're looking at parity over the next few months. And that could actually happen sooner than we expect. One of the things we see here is if we tie the two pivot lows, we can see that the market broke lower right here and is now trending higher. But the question is it going to break above this downward sloping trend line? And over the next few days, we're looking for a rejection and a big move lower. Don't know if that's going to happen. Retail sales are going to be coming out of Australia in about 50 minutes. We're going to be trading that live. Please join us in the members section. If you'd like a more detailed analysis with potential trade opportunities during those live trading sessions, please join us in the members area. This has been Alex Kazmark for SpotEuro with the free daily analysis for March 31st, 2010. Until tomorrow, have a great day and good luck trading.